Analysis paralysis doesn't come from ignorance. Kid, it comes from intelligence. Without boundaries, from the belief that if you just think a little more, check one more indicator, wait for one more confirmation, you can avoid pain altogether. And that belief nearly ended my trading career long before I ever had a chance to find consistency. In my early years, I wore analysis like armor. Multiple time frames, endless indicators, macro views layered on top of technicals, sentiment on top of macro opinions, stacked so high that by the time price reached my level, my mind was already exhausted. I told myself I was being careful, professional, thorough. In reality, I was terrified of being wrong. The more information I consumed, the less responsibility I felt for acting, because hesitation feels safer than commitment when money is on the line. I remember sitting in front of the screen, watching a trade set up exactly the way my plan described, only to hesitate, because one indicator hadn't fully aligned, or one higher time frame candle hadn't closed yet. Price moved without me cleanly decisively, and instead of relief, I felt frustration. Not because I missed money, but because I missed clarity. That frustration pushed me to analyze even more, the next time convinced that the answer to hesitation was more data, when the truth was the opposite. Analysis paralysis is not about too little confidence in the market. It's about too much focus on avoiding discomfort. Every additional variable feels like protection, but it actually dilutes decision-making. The market doesn't reward perfect understanding. It rewards timely execution within uncertainty. I learned that the hard way during a period where I barely traded at all, not because there were no opportunities, but because none of them ever felt complete enough. My standards kept rising, but my results kept stagnating. That's when I realized something uncomfortable. I wasn't stuck because I lacked an edge. I was stuck because I didn't trust myself to execute one. Over time, through enough missed trades and second-guessed decisions, I began to see a pattern. The traders who acted decisively weren't smarter than me. They weren't seeing more than me. They were seeing less, but seeing it consistently. They had fewer rules, fewer inputs, fewer reasons to hesitate. Their clarity came from subtraction, not addition. That observation forced me to confront a painful truth about my own behavior. Analysis paralysis was a form of self-protection. If I never acted, I could never be wrong. If I never committed, I never had to face the consequences of execution. But trading doesn't reward safety-seeking behavior. It exposes it. I started stripping my process down deliberately. One time frame instead of 4. 1 or 2 core setups instead of a dozen variations. Clear invalidation levels instead of flexible excuses. At first, that simplification felt reckless. My mind screamed that I was ignoring information, that I was trading blind. But what actually happened was the opposite. My focus sharpened. Decisions became binary. Either the setup was there or it wasn't. Either risk was defined or it wasn't. There was no room left to hide behind analysis. The trade either met my criteria or it didn't, and that clarity was uncomfortable because it put responsibility back on me. And that's the part most traders don't want to admit: analysis. Paralysis is rarely about the market. It's about avoiding ownership of outcomes. Once I accepted that losses were unavoidable and that no amount of analysis could eliminate them, my relationship with information changed. I stopped asking, "Is this the perfect trade?" and started asking, "Is this good enough to execute within my plan?" That shift was subtle but profound. Good enough meant defined risk, repeatable behavior, and alignment with context, not certainty. I learned that waiting for certainty is not patience, it's avoidance. Patience is waiting for your setup, then acting when it appears, not renegotiating with yourself once it does. As I reduced complexity, my execution improved. Trades became more consistent, Not because I predicted better, but because I acted more reliably. Losses hurt less because they were expected. Wins felt calmer because they weren't accidents. The market stopped feeling like a puzzle I had to solve and started feeling like an environment I knew how to operate in. Analysis paralysis faded, not because I became more confident, but because I became more honest about what trading actually requires. It requires acceptance of imperfection. It requires limits on thinking. It requires rules that protect you from your own intelligence when intelligence turns against you. And the deeper lesson was this: thinking is useful before the trade, not during it. Planning is where analysis belongs. Execution is where simplicity must rule. Once the trade is live, analysis becomes noise. Over time, I learned to separate those phases cleanly, to think deeply when the market was closed, and act simply when it was open, because mixing the two is how hesitation is born. And as that separation became habitual, I noticed something important. The market didn't become easier, but I became more effective within it, because I stopped trying to eliminate uncertainty and started designing my behavior to function despite it. And that shift from trying to know everything to deciding with enough is what finally broke the grip of analysis paralysis, a grip that had nothing to do with lack of intelligence and everything to do with fear. Disguised as preparation, and that realization marked the moment I stopped asking what else I needed to analyze and started asking whether I was willing to execute what I already knew, a question that becomes unavoidable when you realize that no amount of analysis will ever substitute for the courage to act, and that courage only emerges when you accept that being wrong is not a failure of intelligence, but a cost of participation, a cost you must be willing to pay if you ever want to move forward. Because until you accept that cost, analysis will always feel safer than action. And safety in trading is often just another word for stagnation, and breaking out of that stagnation requires not more information, but a willingness to simplify, commit, and accept outcomes as they come. Because that is where real progress begins. And that understanding only fully settles in when you finally recognize that paralysis is not cured by answers. It is cured by decision. And decision only becomes possible when you're willing to step into uncertainty, knowing that clarity will never arrive first. It only arrives after you've acted and lived through the result. And once you grasp that, analysis stops being a hiding place and becomes what it was always meant to be. A tool you use before the moment arrives, not a shield you hide behind when it's time to act. And that shift is what finally taught me how to stop thinking endlessly and start trading deliberately, even when doubt was present, even when the picture wasn't perfect, even when my mind wanted one more reason to wait. Because waiting forever is also a decision, and it's often the most expensive one. Of all, a decision that keeps you watching instead of participating, learning in theory instead of experience. And until you break that habit, the market will continue to move without you, patiently, relentlessly waiting to see whether you're finally ready to choose action over endless analysis. And that readiness only becomes real when you accept that the market will never give you total certainty. It will only give you opportunities that require commitment, and those opportunities are always reserved for traders who are willing to act when the information is sufficient, not perfect. And that is the line where analysis ends and execution begins a line. I had to cross myself before I could ever hope to overcome paralysis and learn what it really means to trade. Because trading, at its core, is not an intellectual exercise. It is a behavioral one. And the behavior that matters most is the ability to decide, commit, and live with the outcome. And that lesson finally landed for me when I realized that the only thing standing between endless analysis and real progress was my willingness to accept that the market does not reward those who think the longest. It rewards those who think enough and then act. And once you accept that truth fully, you stop asking for one more signal and start preparing yourself to prepare yourself to act before comfort arrives. Because comfort in trading is usually a signal that you're already late. In the later years of my career, I learned that the cure for analysis paralysis wasn't confidence. It was commitment to a predefined process that removed debate at the moment of execution. I stopped asking myself what I felt about a trade and started asking whether it met the checklist I had already agreed to when emotions were calm. If it did, I acted. If it didn't, I stood down. There was no middle ground left for hesitation to hide in. That structure felt rigid at first, almost mechanical, but what it gave me was freedom from my own second-guessing. I learned that clarity doesn't come from seeing more variables. It comes from trusting fewer ones deeply. As I simplified my mind, grew quieter. Not because doubt disappeared, but because doubt no longer had a vote. It could exist without controlling my behavior. I also learned to accept missed trades as part of the solution, not the problem. Letting trades go without chasing them rewired something important inside me, the understanding that opportunity is abundant, but emotional capital is not. Every time I forced myself to act only on clean, repeatable conditions, I preserved that capital. Over time, that restraint built confidence of a different kind, not the fragile confidence of being right, but the durable confidence of knowing I would execute consistently regardless of outcome. And kid, this is the part that matters most. Overcoming analysis. Paralysis doesn't mean you analyze less. It means you analyze at the right time. You think deeply before the market opens. You define risk before the trade exists. You decide in advance what matters and what doesn't. And then, when the moment comes, you stop thinking and you execute. That separation is what turns intelligence into effectiveness. The traders who never break free from paralysis are not lacking insight. They are lacking the willingness to accept that every decision carries risk, and that avoiding decisions is itself a decision with consequences. Once I accepted that action became easier, not because I knew more, but because I finally stopped asking the market to remove uncertainty before I participated. I met uncertainty on its terms instead. And that's when progress became possible. If this story reflected your own struggle with overthinking and hesitation, take a moment to leave a comment with your thoughts. And don't forget to subscribe, so I can keep sharing the lessons the market spent a lifetime teaching me.